Hey guys, Mike here. So it looks like we're about to set another record in the market over the next 60 days. I'll let you know what that is. Should not surprise you, but it'll let you know why this market has continued to go up, even when you think, man, it's got to go down, it's got to go down. We've finally been getting some selling, of course, but that was well overdue. But really, a lot of that's got to do with the volatility, right? We're coming up into the election. Okay, I showed you the chart where the VIX spikes. Usually this is super volatile time because the uncertainty, whatever, right? And then, of course, ending October on Thursday, leading into November, December. And it's funny that October is probably the worst month when it comes to election years and ended up closing down for the month, even though we were up, right? But that last sell-off closes down for the month to keep that record intact. And, of course, here we go in November, which historically is bullish, right? Depending on where the flows go and everything like that. But, we'll get into that. Your questions, really good ones about liquidity. Make sure you watch that answer. I'll show you exactly what I'm talking about. I keep referring to that and a bunch of others. But when you look right here, guys, we're about to set another record on ETF flows and break the 2021 record, which is where we were going absolutely insane, according to Fidelity here. And you can see as we go through this, I mean, here's 2022, 2023, Q4 2023 was insane as far as equities, right? And then fixed income, you see, has been actually picking up lately right along with it, which is kind of surprising. Maybe not, though, of course. And so let me know which one you're going into. Are you doing a mixed basket, right? Are you doing the 60-40 and going into some bonds and going into individual stocks or whatever? But when we look at what Fidelity is talking about here, it says it will take another big quarter of flows, but 2021's all-time record haul of just under $1 trillion in annual flows is reasonably within reach. If ETF flows during the last quarter of 2024 match that of the past quarter, that could set a new yearly record. The biggest source of momentum this year has been behind U.S. equity ETFs. During all of 2023, U.S. equity ETFs accumulated roughly $300 billion in flows, while U.S. stocks continue to broadly make fresh highs in the second half of 2024. Equity ETFs saw $177 billion in flows during Q3 alone. Broad-based index funds have been the primary source of strength in terms of flows. And you can see right here, I think this is the fourth week in a row I've had to report this now, but this is the weekly fund flows. And where is it still going? As of 4 weeks in a row, it's going to large caps. I guess that's got to be no surprise in the way. And, we shifted from bonds, it started flowing to large caps. At least we finally got some U.S. broad equity in there. But you see small cap, mid caps have been doing, as far as the flows into it, pretty much nothing, because those large caps are a lot more safe haven in uncertain times, really, if you think about it. And so let me know what you think about that. And getting into the first question, it says, when you speak of market liquidity, what forms of liquidity are you referring to exactly? Thanks, Mike. And what I mean by that is I'm looking everywhere, not just here in the United States, but on a global scale, right? So this is the global liquidity index. You can see that's basically the long-term cycle, as you see it right there. The other line is the global liquidity, right? And so is it easy to get money? Are they injecting? What are the central banks doing? Okay, that's what I'm looking for. I'm looking for liquidity. And so supposedly we're in an upturn cycle, which makes sense because now we reach these peaks, what should start happening? People should start cutting rates, which you're seeing all over the globe, which if the yields go right, that'll bring down lending rates. Also look at all this stuff. I mean, this is why I update this. I've been going like 3 years now updating this stuff. And when you look at it, this is like our Fed balance sheet plus the Treasury and plus the repo program and all that stuff in one. And I'm just looking for major push-ups, major drawdowns, what's happening. And so far it's just been stable, right, for the last like year and a half. And so you look right here in 2020, wow, why'd the market go up? I wish I'd have known about this then. That's why the market went up. Oh my God, we injected trillions. And so when this has a major drop, the stock market usually has a major drop. When it has a major pump, there's 2010 and 2020, right? The stock market loves it. Financial conditions, right? Are they loosening? Okay, if they're loosening, the stock market's going up. If it's going, this little chart right here, if it's going up, right, that means they're tightening. We hadn't seen that yet, okay? You come over here, this right here, what else is happening? Central banks around the world are doing what? They're cutting rates. They're ahead of us on cutting rates, okay? What are we doing here? We're cutting rates. Probably we'll cut this week coming up. What else am I looking at? Banks, right? Is it easiest for us to get money or not get money? If this is going up, that means they're tightening. Recession time. What's happening right now? It's not going up, okay? It was going up going into 2022. They sold us all. Right now, the stuff's going down, right? And then this right here, the net percentage of domestic banks reporting stronger demand for commercial and industrialized loans. It's going up, not down right now, okay? And this is delayed, right? This is going to be one of those ones you look in the rearview mirror at, but it's still been going up over the last few quarters here. And so that's something we got to look at, because I mean, what did Caterpillar just tell? They said, no, it is their business is seeing weakening demand, right, for their equipment. So we should start to see that hopefully go down at some point in time if you're looking for that. So we might see that go down at some point in time. Then you got consumer spending, which actually came in better than expected on Thursday, as you saw. So I'm looking at that right there. I'm also looking at junk bonds, right? If junk bonds are going good, like I said, everything's going good, because this is the most high-risk stuff in bonds. And bonds is the smart money, right? And so if this is going up and not down like this right here, or trading sideways, it lets us know, hey, if they're good buying this stuff, they're good buying stocks, risk on, all that fun stuff, okay? Right now, it seems to be rolling over. We'll see if we break that trend line, then we'll see what happens. But this is another telltale sign. What else am I looking for? What's the Treasury doing? Look at this right here. I put this in the Discord. If you pull this up, what does it say right there when it says Operation Type? Liquidity Support, okay? So this is like taking one of your credit cards, paying off another credit card, and saying you paid off your debt, right? You're not really doing anything, but they're buying back, okay? The bonds, you can see the different types or whatever, and so you see the billions and billions and billions and billions, okay, they're doing this with. And so literally called liquidity support, right? What did the Fed do? They cut the balance sheet roll off by 50%. Now they're cutting rates, okay? So that's not tightening, all right? The 10-year yield is telling us something a whole lot different, right? Now, look at this right here. For example, the Treasury, right, their account. When this thing like surges up, market goes up. See that surged up? When this thing drains down, the market usually doesn't like it. It goes sideways or down if there's a big move, okay? See right there? That was 2022, if I'm not mistaken. And then all of a sudden they drain the account again, and the market goes, cool, we're bottoming. Away we go. And then we bottom in October, never really look back. And you can see what they do. End up draining it down. Market loved it. Then they end up raising this thing back up, right? Try to replenish it. What the market do? Sold down a little bit, not much, right? It's not going to be some crazy thing, about 10% right there. And then they just kind of let it go stable. So if it's stable, market's good. If it's draining fast, market loves it. If it's actually replenishing at a fast rate, market does not like that so much, okay? And so stupid things like that, I guess you want to call them that. That's the kind of stuff I look at. If everything is good on that, the market's going to have its hiccups here and there, but it continues to go up. Now, what else am I looking at? Second largest economy. What is China talking about doing? China considers over $1.4 trillion in extra stimulus, okay? And they're weighing this out. And so I believe the 1.4 trillion is in American dollars, okay? It'd be 10 trillion won. And so if they do this, and they'll do many different things, right? And it almost looks like what we did, right? China to approve up to 4 trillion bonds for idle land, property purchases. Package includes 6 trillion won to address local government debt risk. China to raise fresh debt via special treasury and local government debt. So it's like they're trying to copy what we did over and during our last two crises with 08 and 2020, right? And so if that happens to the second largest economy, guess what? Stuff goes up, right? And so that's the kind of stuff I'm looking at. So hopefully that helps out. Next one, I just want to show an example. It's like these comments about SoFi, right? So SoFi did everything right, but still went down. This is what I was talking about. It ran up so much, and they better hang the moon on earnings, or it's going to go down, right? Well, of course, the market loves to do this. They had a huge move up for SoFi. It's not a big, mover here, but 47% in a short amount of time for it. And of course, they sold it down. They did nothing wrong with earnings. There was nothing negative about the earnings at all, right? But they dropped it, and what they do? Bought it right back up. And when you move like this, when you're gapping up too, I mean, that's kind of crazy, right? So they had a 10 to 12% drop, and immediately they're setting a new 52-week high within like 2 or 3 days. And so they love to do this stuff. If you go over to AMD, for example, had a nice pop up, right? And their earnings were just fine, right? They still got it higher and everything, but the guidance wasn't what the market wanted. So they sold this one off as well, bought it back up in after hours. Now, of course, the market's been going down, so of course this one went right down with it. But again, if you're running up into earnings, you got to hang the moon. That's usually the way it works, okay? Because if you notice, the market is trying to pick out particular things, right? Meta said they're going to spend too much, we'll drop it, and then try to buy it right back up. Microsoft, I forgot what the heck they did. Maybe it was soft forward guidance, maybe dropped it. Tesla, all about the margins, right? The margins were good, even though they missed revenues. Don't care, boom, pump it 22%. Right, so that's just what the market likes to do, and then don't go off the earnings moves and let the earnings are actually really bad or really good, okay? And just look at it as an opportunity to get into a stock if you want to get into it. That's why I always say set your levels, okay? Now, next one here says, how much of an impact will the Trump tariffs have on China trade? And the next one Martin has here is there a difference between calls bought and call sweeps? You say call sweeps quite often in your videos. I'm going to go with the second one first here, Martin. And yes, calls, or like if I just buy a call, that's one thing. Call sweeps is what I've showed you guys, like on Netflix right here, 11/22/2024. Call, they're selling it. And the sweeps, these are really, you're looking for really large orders come in. And what they're saying is, unlike block orders, they're saying just fill it. We're expecting a move, just get it filled at whatever price, really, okay? Meta here, 11/15, call by. Here's these sweet millions of dollars, right? Big orders coming in, okay? And they're just saying, get the stupid thing filled. Not like when we're just going, okay, I'm just going to buy a call here. We're going to buy a couple calls. So it's different. It's a sweep, and then there's blocks, okay, that you're looking at. Those are different, all right? And so that's the ones you usually look for, people look for. And sometimes it works, sometimes it does not. But it'll let you know what they're leaning towards. And if it's sweeps, they're kind of looking for that move. You know, it could be within hours, could be within days, but that's the difference, okay? Hopefully that makes sense. Now, as far as the tariffs are concerned, look, take the politics out of this junk, okay? Because let's understand what a tariff is, all right? A tariff is essentially a tax, okay, for somebody. And I promise you this. Let me give you an example. Apple, we know, don't make iPhones in America, right? They do a lot of business in China. They like a lot of products in China. If Apple ships their products to America, who pays the tariff? Is it going to be Apple or China? It's going to be Apple because they're the company shipping it here, trying to get it in the States, right? So they're going to pay that. So let's say it's 10%. So they're going to incur a 10% cost now, which is a lot. We'll say, you know, ship it in, I don't know, 100 million in iPhones or whatever it is. So it's a lot of money. As a publicly traded company, do you think Apple's going to eat that 10%, or do you think they're going to pass it on to consumers, right? They're going to pass it on to consumers. That's just the way it is, okay? So the country, China's not going to pay that, never have, never will, okay? It'll be Apple paying it. Now, when you look at it, the whole point in tariffs, at least when Trump put it in 2016, was to try to get manufacturing back here, to try to get companies to say, wow, it's costing us so much money to get the goods in, it will be cheaper to hire Americans to make them. Now, with the Whirlpool, for example, that worked. They hired, I think, 1,400 employees. I don't know what happened, if they kept doing that or they ended up laying those people off. And so that was a good thing, right? So the tariffs help or hurt. They hurt certain people and they help certain people, right? Like the tariffs hurt farmers, because what happens is when you put such a large tariff, you target a country like China, what they do is they retaliate. It's okay. Who can we put the tariffs on in America, right? And it was the farmers, right? I know they get hit, but the steel workers, I seen, was better, right? They actually got helped by it. And so then, of course, the cost does get passed on to us, right? And when it's a small item, you're not going to notice it. If it's an item that costs, say, $10.20, you're not going to notice 10% more on that thing. You're just not, right? I don't think you really would. But if it's a $1,000 item, you go, whew, okay, I'm starting to notice that, right? And so we'll see what happens right on this, but China will retaliate. Because remember, Biden kept a lot of those tariffs in place on China, right? So, you know, and so they got their they're good and they're bad. They say that when you target them, though, on specific items, it's actually better instead of just doing a whole broad brush tariffs on everything, you know, that kind of stuff. And so we'll see how it works out. I don't think people really know, honestly. I mean, because you look at any economist, any report on, I've read several of them for you guys. They're all mixed up. They're all mixed up. They just are. Now, they do bring in more money, right? I did see the amount of revenue brought in for tariffs was up for sure under Trump. And so the difference is, like, you know, does that really help us, I guess, in a way? Because it's not like we're given tax cuts somewhat, right? But then you're paying more for your goods. So did it kind of wash out? That's really the big question. Like, nobody really knows. I mean, I'm honestly, nobody really knows. And so especially if we get this huge tariff, he wants to do like a 40% tariff, we're going to see. It's like an experiment. We're going to see. And we're going to see. Because China's not just going to sit there and go, okay, sounds good. They're not going to, especially if they end up losing some manufacturing gigs over there and the companies do actually come back here to make some of the stuff, which I mean, I doubt they would, because it costs so much to build plants here. It's so much red tape garbage. It's insane, right? It really is crazy. And what's really sad for America is what's really happening in America nobody talks about is the steel companies and other like chicken plants and things like that. Other countries or companies from other countries like Brazil especially are coming in and buying those companies in America and then making them work because they're non-unionized, they don't pay as much wage, right? And they make it work, right? Now the workers get paid big money? Nope, not anymore, right? We got a Brazilian company right here in Florida. They bought a big rebar company. They bought another steel company up in Michigan. Russia bought the biggest aluminum plant, I believe, in Kentucky years ago. And so and I'm like, well, is it still American-made steel? If Americans aren't making it, I don't know. You know, and of course they do hire Americans, but I've met their workers. Like one of the engineers lives in my neighborhood. He's the one that put me onto that. And he said, no, we bring in a lot of our own workers on work visas and stuff. So, and we don't pay, what they would call crazy wages, right? We just call it American wages, which is normal because it's expensive to live in America. But so, yeah, I mean, that kind of stuff. So I don't know. Let me know what you think in the comments. Love to get your feedback on that. Again, take the politics out of it. The politics don't matter. Okay, tariffs have existed for a long time before Trump came along. They will exist a long time after he's gone. Okay, so just FYI. So hopefully you got something out of that, guys. Please hit the like, subscribe button if you could. Really appreciate it. And I'll see you guys tomorrow. Have a good one.